Good morning, everyone. This is Nagma, student ID KAC3367. Today, I am going to present my views on the issues in the cash flow statement. To understand this, we'll have to understand the basic things about that first. First of all, we'll see in the first slide three financial statements which the firm prepare are the balance sheet, income statement, and the cash flow statement. Let us explain them one by one. Firstly, the balance statement. It provides a sneak peek into the amount of assets and liability position of a firm on a particular date, that is, the end of the year. The other one is income statement. It provides a sneak peek into the profitability position of the firm, and there is a note bound which says when the cash flow statement is added to the other two statements, this becomes there becomes a possibility to make a comparison of how the firm's cash inflow have occurred and how the cash has been spent by the management in the firm outflow. A minimum required cash balance is needed at every time, and also the firm must be able to generate enough cash to meet the day-to-day expenses. Apart from that, the income statement is prepared to demonstrate the revenue that is generated for the given period, that is the fiscal year, and the expense flow in which the sales cost and all the other operating expenses and finance costs are included. The next is the cash flow statement. The importance of cash flow statement can be measured from the fact that all the profitable companies do not generate or end up with the same amount of cash, and not all the companies who have good cash balances generate good profitability. Next, the cash flow statement subdivides the whole activity into further three parts, which are operating, financing, and investing. First of all, we'll discuss about the operating activity. It mainly deals with the cash that is generated from operations. Next is the investigating section. It finds the cash that is used or generated from investigating in the long-term assets, while the operating activity shows the cash from the operations for the year. Last but not the least is the financing section, which consists of new stock issues and issues of debts and dividend payments, etc. Now, let us discuss about the cash flow operations for the company BHP Limited. As we can see from the figure, BHP showed a positive trend of net operating cash flow during all the 3 years. There is an increasing trend of expenditures in investing activities, and the cash outflows from the financing activities showed an increasing trend also, though the net decrease in cash and cash equivalents in 2019 from continuing operations is $10,495, yet the net cash and cash equivalent at the year end is $15,593 is due to the proceeds from the divestment of onshore US. The next is the data for Centos Limited. It shows the increasing trend in the cash inflows from operating activities, mixed trend in investing activities, and also a mixed trend in the financing activities. Overall, the cash flow has decreased from year 2018. Finally, we'll discuss about the cash flow for Fantastic Limited. It shows a positive increase from the operating activities, a decrease in the outflows from the investing activities, and a decrease in the inflow from the financing activities. Overall, there is a reduction of cash and cash equivalents at the end of year. Next is the generation of cash from operations to pay for all of the capital expenditures. As the figure shows, the operating cash flows generated The operating cash flows generated by the BHP Limited have been found to be greater than the company's capital expenditures. The next is for Santos. The capital expenditure in 2017 and 2019 can be funded from the cash flows from operating activities, and the capital expenditure for the year 2018 is funded from the borrowings of $1,193 million. Last, for the company Fantastic, the capital expenditures are funded from the borrowing and the proceedings of the share issue. Next, we'll discuss about the cash flow from operations that cover the dividend payment made by the firm. Firstly, for the company BHP, as seen from the given table, it can be seen that in year 2017 and 2018, the dividend and the capital expenditures can be funded from the operating cash flows. But in 2019, there are proceedings amounting to $10,427 million from a dividend of onshore US that funded the capital expenditure and the dividends paid. Next is for the company Santos. It says that the capital expenditure and the dividend paid in 2017 and 2019 can be funded from the cash flows from operating activities. In the year 2018, um, they are funded from the borrowings of $1,193 millions. And for Fantastic Limited, it can be easily identified from the readings that Fantastic Limited did not pay any dividend during the given period because of insufficient cash flows. Now, we will discuss about the best suited company when it comes to lendings. So, in my opinion, BHP Limited is the most suited for lendings because it has generated positive and sufficient cash flows during 3 years from operating activities. It has used the divestment proceeds to acquire new assets, exploration sites, and buyback of shares. In year 2019, BHP Limited has bought back its shares, which is a positive sign because it means that the company believes its stock is under un, undervalued and is confident about its future earnings. The buyback of shares will lead to higher share price. All these factors, and along with them, there are a few more factors which easily state that BHP is the best company suited for lending, whereas the Fantastic Limited is the least suited for lending because its own expenditures are totally dependent upon the lendings from the other companies and other sources. So, finally, I'm going to conclude here. And in the conclusion, I would like to say that the financial statements of a company are important to understand its financial position. All the financial statements should be analyzed altogether to get an overall image of the business of the company. For instance, the profits earned by the company can be analyzed from the income statement, but the accounts are maintained as per accrual basis and not on cash basis. Thus, only analyzing the income statement can be misleading. Sometimes there can be profit in the income statement but negative cash flows. This can be due to the adjustments of non cash expenses and exceptional items in the cash flow statements. Thus, to get a clear overall picture of the company, all the financial statements should be considered. Thank you and have a lovely day.